Thank you very much, Chris and Jeff, for those succinct presentations. And what I pick is sustainability, transparency, and thank you very much for going in depth to show performance of the African continent in terms of financial markets, and of course we focus on Zambia and how it performed across the 6 pillars and compared to 22 of its peers. So clearly we see market transparency, 75 out of 100, access to foreign exchange, that's 60 out of 100, which was a decline slightly for Zambia. Legal enforceability of standard master agreements, 83 out of 100, where Zambia did score the highest. Market depth, a little disappointing, 41 out of 100. Macroeconomic opportunity below 50 at 47 out of 100. Capacity of local investors, which was the worst performer, 12 out of 100. So I have with me a high-powered delegation, and I'll reintroduce my panelists. On the far end, we have Mr. Stanley Temele, who is the Director of Global Markets, Absa Zambia PLC. Welcome, sir.
Thank you.
And right next to him is Dr. Patrick Chileshe. Dr. Patrick Chileshe is the chairperson for the ACI Zambia Foreign Exchange Subcommittee. Welcome, sir.
Thank you very much. Welcome, listeners.
Okay, and right next to Dr. Patrick Chileshe is the Director Market Supervision and Development at the Securities and Exchange Commission, Ms. Mtumboy Mjia. Welcome, ma'am.
Thank you.
And right next to her and next to me is the President of the Capital Markets Association of Zambia, Mr. Nicholas Kabasu.
Thank you very much.
So, we will delve into the discussion, and online joining us would be the Permanent Secretary for Economic Policy Management at the Ministry of Finance, Mr. Mukuli Chikuba. You're welcome, sir, online. Various analysts that are with me today as to what the index of performance actually means for Zambia. So we are clearly told by the presentation itself that Zambia did slide to 9th place on the AFM index, overall score 53 out of 100 from 55 in the previous year. I think it's very, very categorical and very evident that disease pandemic has amplified Zambia's fiscal position, hence the request for reprieve from various creditors and some of the effects that we're seeing in the FX markets. With the expectation that fiscal posture does mirror the financial markets, we have the following set of questions. 60 out of 100 access to foreign exchange. These form part of the macroeconomic objectives for the Ministry of Finance and the Central Bank. Of course, we did hear our economists talk about reserves and access to foreign exchange, which was a little bit of a challenge. Zambia did record the steepest slide, 43% year to date of all African currencies, which is breeding transfer convertibility risks. And we have seen the Ministry of Finance then start to accept mining taxes in dollars, a move to show FX reserves, but at the same time this has then sucked money from the open markets. So maybe the first question will go to the Permanent Secretary, the Ministry of Finance, Economic Policy Management. How well has this strategy worked in the build-up of FX reserves? This question will be directed to the Permanent Secretary in the Ministry of Finance, Mr. Nkoli Chikuba. Dr. Patrick Chileshe, you sit on the ACI committee, you're chairperson of the FX subcommittee. What is your take on the move by the authorities to accept mining taxes in dollars and the effect that it's had on the oil markets and the currency as a whole?
Thank you very much, Tisunge. Yes, indeed, the recent moves by the authorities to dollarize mining flows to the market has had a negative impact on the supply of FX on the market, and that has negatively impacted, I think, the operations of the private sector, and we've seen it actually play out in the market. We've had engagements between ACI Zambia, the Financial Markets Association. We've been having continuous engagement with the central bank as well as the ministry to try and see how best we can actually resolve this, because lack of access to foreign exchange does have very big implications, especially that Zambia is a net importer of essential consumables into Zambia. And if the situation goes unchecked, it may have other macroeconomic consequences which could not bode well for the country. So yes, the dollarization of mining taxes as well as other fundamentals, I guess it's not only the effects. Us at ACI, we've also seen that the recent monetary policy moves to try and support the fiscal sector has had also an impact on the flows of capital into the country, because that has had a negative effect on real returns amid a depreciating currency. So what you have is a situation whereas interest rates are going down, they are becoming less competitive for the foreign investor out there, and on the other hand, the currency is depreciating. So you have a situation where we are also seeing a decline in portfolio flows into the country, and that has had also an impact on private sector supply of foreign exchange. So all these issues, we are putting them together. We are continuously engaging with the central bank. We've also had engagements through Bankers Association as well as the technical committee on the financial markets, which sits under the banks. So essentially, there is this need for us to work together, especially to make sure that we deal with the issue of access to foreign exchange, because it has implications like I've already alluded to.
Thank you, Dr. Chileshe. And before we get the Permanent Secretary who's joining us online, I'd like to find out from Mr. Stanley Temeli, being the Director of Global Markets, in a time when the market is faced with FX scarcity, how has trading been this period?
So thank you for that question, Suge. In fact, trading has it's been quite a challenge, admittedly. Apart from just the issue of supply, which is being faced by all the banks, within the banking sector. There's also the issue of demand, which we sometimes forget to look at. Demand has grown over the years. You will recall that over the past couple of years, we've seen positive GDP growth. There's been an increase in activity, and alongside that, there has been an increase in demand. So yes, there has been this move which has seen a decrease in supply, but that also comes with a corresponding increase in demand. And the majority of the demand that we've seen has really come from the agriculture sector, the energy sector, and to an extent also in the roads sector. And this is quite huge, because these are needed to continue driving the significant part of economic growth. So trading has been a challenge for most parts and for most of the banks. We've had a situation where we've got a lot of demand and we don't have any supply. So it's very little to small supply. And there are a number of factors that have led to that. One of them being generally most of the dollar sellers. Well, the mines are the biggest part of it, and that a significant portion of that has been pulled out of the market, but there are other sectors as well that contribute or bring supply into the market. However, with the negative sentiment around it, most market players want to or are trying to hold on to their dollars, and they are not really selling. So if you look at a combination of all of those factors, we as banks then become under pressure and are unable to fill the demand for the majority of our clients, which then also has implications because some of the clients that we deal with have got, they've got supplier contracts with entities that are outside of the country and they are unable to service them. So as a result, it is a ripple-on effect, but it's definitely been a challenge for the last couple of months for the banks.
Thank you. Thank you for that. And do we have the permanent secretary on the line yet? Okay. Still having a bit of challenges here and there, but back to Dr. Patrick Chilesh. I'll take you back to your central bank days. You've been a central banker before. What do you think the central bank's strategy should be around price stability in an environment where currency is depreciating?
It's really, I feel for colleagues working at the central bank, because this is really a very difficult environment that they have to navigate, because on one hand, they have an economy which is falling apart because of the disease pandemic, and they need to help shore up the economy. On the other hand, inflation is rising, and they also need to fight it, because you cannot ignore it for a long time, because it has consequences for the economy. So, in other words, you find a situation where they are between what you would call a rock and a very hard place with regards to the decision as to which of these two good things that you need in an economy. You need price stability, you need a growing economy. So between the two, which of them do they actually choose? And I've seen quite a lot of very difficult decisions that have been taken by the central bank to try and shore up the economy. And there are certain things really that are not in the hands of the central bank to actually deal with, especially with regards to fiscal consolidation. There's nothing they can do because that is not their day-to-day objective. So in that regard, they can only do so much. And much of the work, I'm sure it will eventually have to come to from the fiscal side to try and one, shore up the economy, and also to try and bring back the confidence into the economy, and essentially build up confidence from international investors, and probably we can get help from here and there and probably get back to the track. There's a lot of things, Tisunga, we can actually, in my view, we can actually do. One of them, one thing I would do if I was, for example, at the Ministry of Finance, like my colleague, one of the things I would want to do is I'll probably try to look at what I have and what is it that I can do with it. Tax policy is one of those things I think that can be re-looked at, especially with regards to the mining tax regime. We seem to be changing a lot, and we seem to be responding to economic fundamentals on the international market. For example, copper prices have crossed 7,300 at the moment, as I was looking at it at around 12 hours. This is the time that people start talking about the windfall tax and everything, and all of a sudden you could have actually have a situation where tax policy is changed. So that inconsistency tends to create anxieties amongst investors, and that tends to affect foreign portfolio inflows. Another thing that I think government could do in this regard is also try to look up around the regulatory policies, I think, surrounding foreign investments into the country, especially investments into the various securities that we have. We've done well so far. That is one of the highest ranked area with regards to regulatory, but I think we can do so much to deepen the market. I know the central bank has been working with other regulators in the financial markets. SEC is one of them, to try and deepen the market, especially with regards to the creation of a primary dealership system, which in my view would have a very big impact on trying to deepen the market and probably create more confidence with offshore investors. Then for the Zambian kwacha, I still believe the government needs to reverse off the recent moves. I know Stanley has mentioned that there are other players in the market, but the problem we have with the other players in the market is that majority of their obligations, some of them are in dollars. What I've actually realized is that when you look at the balance sheets of most commercial banks, yes, when you look at them, they are holding foreign exchange deposits. But those foreign exchange deposits belong to entities that actually do much of their business in dollars. So even then, there is no trigger that liquidity will find itself into the normal trading businesses of entities. The central bank has mentioned quite a number of times that there is a lot of dollars that banks are holding, but unfortunately they are holding it on behalf of their clients, and it's very difficult for those dollars to find themselves in the market if the entities holding them actually have dollar liabilities. All they will be doing is they will be issuing instructions in dollars and you pay. But what we need is to encourage the mining sector, because the mining sector essentially, even if they don't bring the entire amounts of dollar receivables into the country, they have kwacha obligations, and that is what creates a liquidity into the market. To me, encouraging them to convert on the open market to create a lot of stability, and once we have that stability, we could actually create confidence, to borrow from what Stanley was saying, to actually make these people are trying to hold. Because once you see the currency stabilizing, the next thing is the currency may move against you. So you start converting. So as long as everyone knows that there isn't enough liquidity in the market, they will try to hold on for a little longer to actually try and make some returns.
Just on that point, I will ask you to pause and I'll come back to you. We're a very gender sensitive panel, and I think I'll direct the next question to Ms. Medina, and then we can get to Mr. Absa. So, still on foreign exchange, let's go to the capital markets. BNP Paribas, a week ago, issued a statement that they will be suspending custodial services to Zambia. Of course, this will pretty much cause asset sell-off pressure. Zambia skipped the payment on its coupon, 2024 bond. What is your take on the impact that all this will have on the capital markets as a regulator?
Okay. Well, thank you very much. And firstly, I wanted to acknowledge our host, Absa, and their partners for a fantastic research into the index that is the subject matter of our discussion. And I really wanted to say that it's a very useful tool. And yes, we are privileged to have the fourth report of this. And why I consider it useful is it gives us insights into what we're doing well on, what we're not doing well on, and also it gives us a chance to compare ourselves with peer jurisdictions. And it also reminds us, it gives us an opportunity to literally introspect respect. And I must state that for the capital markets, the Absa report does find us at a very good point when we're actually going through that process of introspecting and asking ourselves what it is that the capital markets has to offer in the bigger scheme of things in driving the economic agenda of this country. And you will agree with me that for a long time now, the capital markets have played a very small part. And we have been busy planning. We have been busy brainstorming and trying to put the capital markets in order and reposition it for it to be able to play the role that it is expected to play in the bigger scheme of things. One of the things that is important to emphasize is that the markets work on perceptions. And it's extremely crucial for us at the time such as this when we are working on developing and repositioning our capital markets, the sort of feedback that we are getting, or the sort of actions that we are getting from international partners, such as the ones that you mentioned, the international custodians. So yes, it is a concern for our markets, but I think the challenge that it presents to us is exactly what we are currently embarking on, which is to step back and ask ourselves, how do we ensure that we have the right perception in terms of how we're responding to this crisis that we are faced with. And I think a starting point is to acknowledge first and foremost that this is a time for crisis managers to arise. It's a time for us to tap into our basic skills in terms of planning and to literally ask ourselves very practical solutions. For Zambia, one of the things that is clear is that the fundamentals currently do not support the growth of capital markets, or they do not allow the capital markets to literally play the role that they expected to play. And I know we'll probably get into that depth of a discussion, but these are the issues that we sort of need to be addressing very pragmatically and asking ourselves, how are we going to address the aspect of having very lucrative government securities at the expense of crowding out the private sector. And there is an inverse relationship between the development of the capital markets and what is pertaining in terms of the cost of capital, specifically for government paper. And that is, those are the issues that we are trying to sort of address ourselves to, alongside with addressing the softer side of issues of how we communicate with not only the international investor, but also the local investor. So maybe in coming back to your question, we are of the view that we need to literally have a communication strategy that is agreeing across the subsectors within the financial sector in terms of providing concise information of what is pertaining on the ground, what the real situation is, and as you can see from the report, our financial markets are still very strong. And it's just a matter of us repackaging ourselves and providing that confidence and explaining ourselves very well in terms of the solutions that we are devising. And therefore, giving that comfort to whether it's a local investor or a foreign investor to still trust these markets, because they are still very credible. And the fundamentals in the bigger scheme of things in terms of investor confidence are still operating.
Thank you very much for that. Mr. Kabas, what gives you sleepless nights in such a turbulent environment? What is the Capital Markets Association doing to gear up for this economic turbulence?
Thanks very much, Sonia. So I think from what we're sitting as an association, obviously catering for the different market players, there's quite a lot that happens, within the macroeconomic environment that has a bearing on our nature of work. And also, we've got a lot of leading fundamentals that have to speak together. I think like economists have really spoken to. If some of these fundamentals are not moving in tandem with our expectations, it has got a very huge adverse knock-on effect in terms of just how we're going to be able to increase our level of play as markets. And then also, we've also got a lot of, inherent, sort of demand that is coming through from obviously what we're seeing from our peers with respect to what it is that they're doing, which we're not doing very well. If I can probably pick out a bit of some of the issues that are coming up very striking in the report. Looking at such peers like Seychelles that have just moved up the rank, I think, quite very remarkably. They're moving from a listing of about, say, 21 listings on the Absa, on their stock exchange, and they're moving all the way north of 40 listings over a space of about 2 years. That's quite a huge sort of, growth in the market. And if you look at the capitalization also to GDP, they've literally moved up very well. They moved up from about, say, 21% to GDP, and now moving on to about 89% to GDP. And this is a country or an island that has just got a population of less than 200 people. And then here is Zambia with a population of more than 18 million people, and we've got an exchange that has been in existence for over 30 years, or close to 30 years. And for the past 30 years, for the past almost 30 years, we're talking about 22 listings on the market. And if we're going to be having a market where individuals can have existence of play, can also be able to sustain, their professionalism, the number of listings we're likely to see on the market translates back to what we should be looking at as market players. So sitting as an association, these are some of the few things that give us pain points. How are they going to sustain the market if we're not going to be seeing so much listings on the market? Liquidity remains quite very stunted. And if you have to look at also the drive from policies or very good policies enacted, that speaks to some of these fundamentals, but we're not just enforcing it. So again, having a situation where we're in an environment where we've got good policies, but these policies are not being enforced, it kind of gives a lot of pain points in terms of how then are we going to get to, for lack of a better word, the promised land. So sitting as a president for the association, these are some of the few things that even as you sleep on, you realize that we literally have to get to see how we're going to find ourselves, crossing some of these hurdles. There's supposed to be, hurdles that we need to cross over for obvious reasons. The market has to grow. And the benchmark we're seeing across different, countries in the region, just clearly gives us a sense in terms of whether we're just dragging ourselves on the discussion table or we're just not being effective in implementation. So we can clearly see that such kind of large mechanism of transmission of what we've agreed to do from the policy perspective and also from the market perspective really give us a lot of emotional drive to get to see what we need to be doing going forward.
Thank you very much. I'm going to come back to this, but I'll spare you for now. I'll go back to Stan. Stan, so it's very evident that FX is a very sticky point in the Zambian market. It affects cost of doing business, and I'm sure some of our viewers are your clients, that are looking forward to, hope. So what solutions are you offering your clients in such, uncertain times as this?
Well, thank you for that. And as Madam Ntomboe had mentioned, when we find ourselves in these times, it then becomes time for getting around the table and starting to thinking outside the box and saying, okay, we are in this situation where practically the problem with regard to FX is there's no supply. What else do we do apart from telling the client that we simply do not have? Yes, sometimes it becomes inevitable, and we do have to say those things, as banks. But we then started to look at some of the other products, and this is where, looking at the experiences in some other markets, this is where it starts to play a part. There are a number of other countries which we could look at, and their situations may be similar or may differ. The case in example is Mozambique. Not long ago, Mozambique had a default, but the default in Mozambique was very different from the one that we have here. What we have is a default on the coupon payment of Eurobond. In Mozambique, it wasn't the Eurobond. So it's a different picture. But with that having been said, there are opportunities to look and see and say, what exactly did Mozambique do in this situation? And then even moving on from there and further afield, you look at the situation in places like Argentina, which had a pure default, similar in nature to the one that we have. And then you see that commerce still continued after that. Yes, it was difficult, and it does become difficult, But we look at those type of situations and then we learn from them. And then what we pick up is there are certain products which historically in this market you will find it's the top tier corporate entities that will be dealing in those products. But yet they are simple vanilla products, things like forwards or things like swaps. This is where it starts to make sense because those ones have got a longer delivery date. In general, you can negotiate. They can go up to 1 year in this market. And when you start transacting there, even for a bank, if you know you will have to deliver dollars, you give yourself that time, provided you agree with the client that settlement is in 1 month or 2 months or even in 6 months. Then as a bank, what it does, it allows me or any other bank indeed to then start scraping up the little bits and pieces which are available on a day-to-day basis. So that becomes one way of looking at this particular issue. The other way, and was also alluded to by my fellow panelists here, is dialogue. So the dialogue has continued between the banks represented through the Bankers Association and also through ACI Zambia to discuss with the central bank and potentially look at the pros and cons. Sometimes policies are or directives are put out, but when you have that open the open door to have discussions, we then start to see that maybe this is doing more bad than good. It may have had a good intention, but because of this negative effect, can we change it slightly in this way? And those conversations are still ongoing. So it does remain a challenge for us. I'll tell you, it's very, very difficult. And sometimes it's difficult to convince clients that it's not just us, the bank, that is not giving you what you want or not being a bad bank, but rather these are the signs of the times. This is where policy or guidelines have gone to, but we continue to have those dialogues. So if I look at those two things, those are two things that I think right across most of the bank we are actively discussing with the regulators and the other stakeholders.
Thank you very much. Thank you very much for that. So I wanted to talk about innovation, both at product level and usage of technology as an enabler. I think from Gable's presentation, it was very clear that in COVID period, the markets across Africa have seen innovation. So this question is directed towards you, Mr. Kimball. And then after that, Dr. Patrick Chileche, if you words can also add one or two things. So we've seen issuance of corona bonds, social bonds. So we haven't seen the same for Zambia. What are the hurdles, or would you like to shed more light as to why the picture is obtaining as it is?
Thank you once again. And I really did come on earlier to say that it's basically the time for planning and the time, a little bit late for planning, but better late than never. But it's also the time for your crisis managers to arise. And as you rightly put it, innovation this time around, and COVID has come to literally show us that if you don't innovate, you literally sink. We are thinking outside the box, and I thought I mentioned at this juncture that we are in the process, spearheaded by the Ministry of Finance, developing a 10-year capital markets master plan. And the 10-year capital markets master plan started with asking the question why we are where we are as a capital market. Just so that I can literally be granular here. Your capital markets are your right and your correct platform for raising capital for long-term ventures. And the expectation is that they are well placed to sort of identify these plausible projects and for the allocation of capital in a society like ours, or in an economy like ours. That's not working quite as such for the Zambian capital markets, and we've had to ask ourselves the questions as to why that is not functioning. And in asking those questions, we've obviously engaged a lot of stakeholders that sit on the steering committee that is headed by the Ministry of Finance, and I'm actually glad to literally say that we're actually looking at the final version of this master plan. And you will see in the master plan, all we are asking ourselves is, can we agree what the vision for the capital markets is? What exactly do we want to see happen with the capital market? And now when we look at the situation we find ourselves in, where, for example, the international markets may well be considered a no-go area for all intents and purposes, given the perception and the negative news that is prevailing on those markets. We actually are of the view that we do have solutions in line with what the previous panelist highlighted, that you could then leverage on your local markets and bring viable projects onto the local markets, on the Zambian capital markets, package them in such a way that we can convince, whether it be a local investor or a foreign-based investor, that we have put in place the necessary safeguards and the mechanisms that should guarantee the safety of the investment, and that should ensure that your funds are literally going to do what they're intended to do. In talking about innovation, I want to speak specifically of the green bonds. I did notice that we didn't make it in the index, that Zambia has actually put in place a framework for green bonds. And we did put in a framework late last year, and I really think it will go in this year's index. It's a very important framework because what you tend to see now is your investors out there are very particular in terms of what they want to be seen to be promoted, and very deliberate. And so right now you have lots of pools of funds, sustainable funds, social funds, green funds that are seated looking for very good projects. When you look at Zambia, we have a lot of viable sustainability projects, if you like. But perhaps what we need to ask ourselves is, how do we bring those projects onto this fantastic platform that is already functioning in the capital markets, so we can attract those funds that are looking for these very specific sort of investments. And if we are able to demonstrate that we do have the infrastructure, we do have the legal framework, and again, we did come out very well in terms of our legal framework in the index. If we're able to demonstrate that, we will begin to actually resolve some of these issues that are sticking points currently, including to do with your forex. So, in literally trying to respond to your personal innovation, I think for now, as a financial market, we need to really zero in on what the capital markets can do, can assist us in terms of coming up with very practical solutions. And for the Commission, we're extremely open right now, because I've already said that we're in this process where we're developing the Tailored Capital Markets Master Plan, and we're looking for difference, we're looking for innovators. The other thing that we have done, coming to your specific question in terms of technology, is we again, before the end of this year, will be issuing the sandbox regulatory framework. And with the sandbox regulatory framework, we are calling on the fintechs, the techies of Zambia, to design these products that make it possible for us to intermediate much easily and mobilize these resources, whether the funds are seated in America, whether they're seated in Europe. With technology, our markets can open. So basically, those are some of the ideas.
Thank you very much, and I'm sure Stanley has heard, and that's the kind of content we expect in the 2021 AFM Index. But while I go to Mr. Kabaso and Dr. Chinesh, I would like you to think about something. Who will subscribe your green bond when your credit rating is different? I'll come back to you. I'll ask a simultaneous question. Mr. Kabaso, Dr. Patrick Chinesh, why is it that individual retail clients can't buy stocks using mobile money? We've seen Absa in Kenya. Dave Gable's presentation. See that in Kenya they can buy treasury bills using mobile money. So the treasury bill question is for you, Dr. Patrick, and then the stocks using mobile money.
So I can quickly take on the aspect of stocks. So I think it's a very good question. And one of the few things that came out in the report, again around what some of the innovations that other countries have done, I think should be Uganda, that have provided direct access to the trading platform, using their mobile phones. I think earlier as we were discussing just before the meeting, I did mention that, what the report has actually brought out is basically helping us get to see whether we're just being too slow or just sleeping on what we're supposed to be doing. If you look at the conversations that we currently have very live on our table right now, is a great aspect of trying to get the mobile, phones, integrated to the trading platform. So not too long from now, we should be able to get to see the rollout of the mobile trading platform, which will then allow individuals to be able to trade, buy stocks and buy shares or even sell off shares whenever they have.
Not too long. Are you going to give me the time?
So I think it's already now in UAT form. As we speak right now, I think it's being piloted. We should be going live anytime, probably even before second half of next year. So obviously looking at the timing, we're almost in December.
7 months.
Yeah, so probably looking at the next as probably even 3 months before we can actually be able to get the final verdict of whether that product is good for market or not. But that has already been started, and we're getting to see that good traction is heading in that right direction. The other thing that we probably can be able to talk about is, the awareness among the retail public in terms of being able to buy shares and why we need to buy shares. I think we've got an inherent culture, orientation towards, anything that is risk I don't have to touch, and what has happened in the end is that, the moment you mention risk, everyone else just backs off. Yeah, but what you didn't realize is, and I think that's the message that we're trying to send out even in the market now, is that investing in the stocks shouldn't be looked at as a short-term, investment platform. These are medium to long-term. And if the messaging can go out right, we can then get the right incentive in terms of information going out to retail public. For the most part, we've had a lot of institutional play, and if you look at institutions again like pension funds, they're kind of caught up also institutional by the market being very liquid, and therefore, whenever they buy, they hold on to those particular shares. They don't easily offload them because they're not off-takers on the market. So it becomes very difficult again for retail participants to get on the market because they don't have reciprocal positions to buy off. So we hope with the passage of time we can then be able to get to see quite a lot of activity on the market that will incentivize you and me to be able to play through the trading platform. We can talk about many other inherent challenges like the broker system, where I can't trade straight with the loose unless I go through my broker. So which becomes a bit of an inherent challenge, even as we're getting to roll out the trading platform on mobile phones.
Thank you very much for that. I'll come back to you on lack of off-take, which is illiquidity.
Sure.
Dr. Chileshi, I would like to add one more line.
Yes.
Do you not think that the central bank is focusing so much on big players when they actually tap liquidity from retail players if they were allowed to buy bills through small denominations and looking at government their mobile phones?
I think, let me not, blame them for anything. Essentially, the central bank has done a lot trying to even attract smaller retail investors, so to speak. All we need is probably the financial players as well as ourselves to work together to try and find a common ground where retail investors can have easier access, because the most important thing is to provide a solution that is easily accessible. Because if I'm going to invest into treasury bills or government bonds with as little as 500 kwacha, I need to find a solution that is going to cost me least. But now, if you're going to put me in a position where I would have to take a minibus from my place, spend 20 kwacha into town, to go and see my bank and discuss with them to transfer the 500 kwacha, that makes it very expensive and very discouraging for me to do. In Kenya, like you've already mentioned, it has been very easy for them because they've created platforms where it is easier for a small investor to directly interlink either with their bank or directly with the central bank to be able to buy smaller notes. Again, the other problem I think that is there is lack of liquidity. I think that is something that will be labored. Sometimes you may want to invest in a product in such a way that once there is trouble or you face some sort of a need, you should be able to find a second buyer for your product and be able to use your proceeds to meet your immediate needs. So essentially, the central bank, I'm sure they should be working. I've been in some meetings with them where they've been trying to also advocate for solutions that make it easier for retail investors to actually invest in government securities. And they've also been encouraging us as commercial banks to actually try and encourage our investors to also look at other options such as government securities to actually raise, to invest in. And also, I also concur with what Kabaso said. It's also a mind shift, and it is something that probably we need to shift. In Kenya, it has been able to work quickly, fast, in the sense that in Kenya has largely been what you would call a more capitalist country since the late 1960s. They've never had a socialist approach to the economy. So you find that many of the investors in Kenya are more alive to investing in other forms of securities. Here, up to most investors are going to meet on the market, they always feel building brick and mortar, building a house as the only viable form of investment. And that is a mindset that we need to change over time. And that is the only thing that is going to build up our market, that is going to increase the size of the local investors. You've seen the score on pillar number 4 and pillar number 5. They are actually intertwined. We are scoring so badly because our market is narrow, it is illiquid, and with more education, I feel we can actually deepen the market.
Thank you very much, Dr. Chinesh. I like that you say this market is shallow, which takes me to the next point. I'm back to ask Ms. Mwendia. Market depth pillar, 41 out of 100. Clearly, the markets are shallow. Macroeconomic opportunity, one of the weakest scores, 12 out of 100. Capacity of local investors, 47 out of 100. My question is, no IPOs in a very long time, no rights issuances. Market cap slowly being wiped out by exchange rate issues. I'm sure that must be very worrying for the regulator. What exactly? I know you've talked about all these initiatives that are yet to be unleashed, but in the interim, what happens?
Thank you. You actually left me with a challenge. I want to pick it up from the challenge. You left me with a challenge of who would invest in our green bonds with the sort of perception that we have on the international markets. And I think that's exactly the radicalness or the difficulty of the situation we find ourselves in. And it's the exact reason why we're calling for a different thinker, your crisis managers, because Zambia is not the first country that's finding itself in this situation. I think my fellow panelists did give an example of Mozambique. And quite all right, there were different circumstances, but default is default. And we have a lot of examples to sort of look to in terms of how other countries have steered themselves out of these deep waters. It's not the end of this market. It may actually be the beginning. And personally, I am very convinced that it creates an opportunity for us to address some of these fundamental issues that have never been addressed. And I did point out one of the major fundamental issues that needs to be resolved, needs to be addressed for capital markets to take off. And that is the scenario where we have, first and foremost, a very heavy reliance on the banking sector for financing our long-term projects. Then secondly, you also have very lucrative government paper, treasury bills and government bonds that can justify a financial institution, a bank, to basically be very content with placing money in government securities as opposed to taking risk or lending out that money to private sector. A private sector that actually needs that money to drive this economy. So we do have these things that I have looked at, and I personally would call it a somewhat unsustainable model, where we have milked a cow to a point. I think we would have to agree that the cow no longer has milk, and we need to change the strategies of how we've done commerce in this country. And at the heart of that is the realization that you need a functional capital market for even the banking sector to be able to play an effective role. If your capital market is not addressed, what you end up is exactly the Zambian case, where everything is thrown to the banking sector, and what you have at the end of the day is a very, very high cost of doing business, because the capital that the bank ordinarily trades in is not intended for some of these long tickets that we forced it to take on. And we can have a separate argument with the bankers that are seated here. But I think we have come to a point where there can be no further debates that the Zambian capital markets have to be functional, and the start of their functionality is addressing the macro, the monetary policy in terms of the government's participation in the financial market and what signals they will be given. Because you see, for the capital markets, the fact that you have paper that is fetching for 30% creates two problems. The problem that I earlier alluded to, where the banks can be comfortable and government usually crowds out capital for other businesses. And the second one is that the capital market issue is very expensive, because the government issues a benchmark for whatever it is happens in the capital markets, whether it's from the equity standpoint or from the debt standpoint. The reference point will always be government paper plus. So if we already have 30% prevailing on government paper, or even 24, it's too high. It means as private companies, I have to issue my securities, whether it's a corporate bond, whether it's shares, I will be needing to promise you way above the 30% that government will give. And just there, we can't have an aspiration of developing our capital markets when that fundamental hasn't been addressed.
Brilliant. I have the last question for you. Capacity of local investors. I still want to speak about it. There's so much of a dependence on the state pension fund. It's always Absa, Absa, and Absa. Where are the insurance companies? Where are the small fund managers to play in the liquidity space?
I'll gladly take that question, and I think we do see participation, but not at the level that we want to see it. And we already, for example, have frameworks or regulations that promote capital markets. For example, the investment guidelines by the Pensions and Insurance Authority do actually promote that those funds, pensions and insurance, are invested in the capital markets. But again, I think it comes back to the issue of competing investment destinations. So if there's shares on the LUCE versus government people, that's 30%, and I'm a fund manager, there's no question there. My money will go to where it's safer and where the rates, and that's exactly the challenge that we have as a capital market, and where I was coming from by the time I was saying that we need to address the fundamental if we want the capital markets to work, because otherwise they will always be outdone by the money markets. Then I did promise that I was going to respond in terms of who is going to invest in our instruments with this sort of perception. So again, the challenge is for us to have our strategy in order and be able to signal that the local markets are still credible and we're still able to ring fence these projects and still able to give the assurances that an investor is looking for. And I think I just need to make the point that one of the biggest advantages of the capital markets in terms of allocating capital and literally funding our economy is you can design products and you can design instruments, or you can come up with vehicles that are extremely flexible that respond to the exact requirements of an investor that is sitting out there, whether here in Zambia or out there in overseas. And that's the beauty with the capital markets. So if you've got green bonds investors or sustainability funds or social funds that are looking for plausible investments, what you need to do is just structure your product in a way that it meets the criteria, the investment criteria of these foreign-based investors, and do what it takes. And I think for Zambia, we still have that capacity and we still have that opportunity. Coming from COVID-19, we have to realize that there's so many other countries that are having challenges in their economies. And rightfully so, you can't put yourselves out of the race. What we need to be doing is finding these very practical solutions and sending out the right signals and having the right strategies in place, including a communication strategy, where we clearly communicate what it is we are doing, how we are addressing the pain points that have actually also been expressed in these international markets. And I think we have a fantastic opportunity because in addition to having working frameworks and legal and regulatory frameworks, we also have a very wealthy country in terms of natural resource. And there's a lot of things we can do also from that perspective, coupled with the capital markets. There's so many projects that we can bring onto these platforms, dress green, brown, social sustainability, and just offer the right sort of structures, and we can attract some of these. I'm so certain and confident that we're not a basket case that cannot convince funds to come our way in the future.
Thank you very much. In 20 seconds, Mr. Jaman, any last words?
Yeah, no, thank you. So, I mean, listen, we are, if I can put, we are in turbulent waters. I think that's one thing that is pretty obvious. And what we need to do as a country, all sectors, right, of course, is to use this. Yes, it's not the most desirable of situations to be, but to rather look at the glass instead of it being half empty, to look at it being half full, to look at it being full, half with water and half with air, and take advantage of this opportunity and try and innovate. We need to come out, get out of the comfort zones and do whatever it is that we have to do to move everything forward. That's the first part. And the second part is, even as we look at the index, we need to now start making the active steps to start going up on these pillars. It's one thing to have a nice conversation about this is where things are, then to go back into BAU, but we need to now move this forward and start taking the active steps. And I think 2020 and coronavirus have taught us so many things. Let's come out as some of the biggest beneficiaries of this unfortunate situation.
Thank you. Dr.
Yes, we are in uncharted territory. Of course, the only good thing is we've had examples that have happened before, countries that have gone through similar challenges that the country is facing. And in this environment, collaboration becomes very, very important. We need to work together as a country to come up with solutions, workable solutions that are going to be more sustainable and probably drive the country forward. So indexes such as the African Financial Market Index gives us a gauge, and actually it should be something that gives us a momentum, a drive to see what gaps do we have that we need to bridge so that we move forward. So as an association, and an association that is at the center of the Zambia's financial and capital markets, where everything falls through, we are really trying to collaborate with our regulators in the market. We are also trying to collaborate with our colleagues in at the Capital Markets Association to try and build partnerships and actually try to come up with solutions that we can present to our regulators, because we are the people who are at the receiving end of these regulations and who are also interacting with our customers, who are also giving us, because when we interact with a customer, especially in this environment, they also come with their own solutions. Why is it that you guys can't do this? But certain things we can only change them if the associations that are working with our regulators, such as ours, we can sit down with them to say, from the broad network of our members, this is what the customers are saying. Can't we do the ABCD to deepen the market, to also improve our macroeconomic environment so that we start scoring better? Thank you. That is the first.
Mr. Ross.
Yeah, I think from my end, I think just to recall on what we spoke about earlier, I think what I would probably want to say is that if you have to look at the index, the way it has actually brought out some revealing, differences between us and the rest of the region, I'll probably push the fact that we have to be more proactive in terms of managing our policies. Looking through the various initiatives that other countries have done, those are initiatives that are not very far from home. These are initiatives that we have. I'm literally looking at a lot of research papers that have got similar recommendations like what we're seeing in other countries do. But I think where we're sitting now is that we've got a document that is very beautifully done, but just far away. So I think the take home from this particular, discussion is enforcement of policies. We've got policies already. We've got the Vision 2030. Who is actioning that? How we benchmark success? We've got the national financial inclusion strategy. Who's pushing those agendas? If you look at the fiscal reports that have been coming out, we're literally doing very well. But again, we're not seeing a transmission of some of these accolades back in the report. So I think we just have to be very deliberate in terms of us executing what we have said we're going to do, and then also being very thorough and quite very determined to use the institutional structure that we have. We have got very bigger structures that have been around for years, but we're not exploiting them to really help us to get to where we're supposed to be going at. And then if you have to look at market depth, I think it's a wake-up call. If you have to look at the report, we've got a very vanilla, capital markets. And then other markets have literally grown sophisticated in terms of product offering. It's only now we're going to see the first ETF coming on board. And then probably as soon as we get the guidelines on rates, we can get to see probably coming through next year. So we are seeing ourselves getting to level up in terms of our sophistication, but we literally have to be very reinforceful and very deliberate in us being able to get to that particular state of affairs. Otherwise, if we're going to leave ourselves at par with the current level of vanilla product offering in our markets, we'll probably be back here next year talking about a similar findings and why we're not doing very well. So I think the take home, let's be more proactive, let's be more reinforceful. We've got policies, let's make them work.
Thank you very much. I just want to take this opportunity to yet again thank Absa for this initiative to put together a useful benchmark that we are ourselves using to do the plan that I spoke to you earlier. And also to thank Absa for taking leadership in terms of dialogue, the very thing that we're doing here. And I just really want to reiterate that we have what it takes. We have the minds that already know what needs to happen, the sort of interventions. And like Mr. Kabaso has said, it's time for action. And really, the future is green, and it's green via capital markets. I still want to end by saying that the capital markets are a rescue for the times we're in, and we need to leverage the prowess that the capital markets can offer in this time. Thank you.
Thank you very much. So I think in summary, we've heard the takeaways from our panelists. I think what's key is sustainability, is innovation. There are some solutions that have been prescribed by the director of global markets, that's Absa, but at the same time we're getting a number of initiatives and interventions in the capital markets coming from the Securities and Exchange Commission, and we also heard from the Capital Market Association. We look forward to next year seeing all those initiatives that have been spoken about. But more so, I think coming from ACI as well, is that collaboration is very key. I think it's time for relevant bodies to talk to each other, because we can actually do it. And I think what really stands out is that optimism in the long run for Zambia is still on the table. And much as, yes, we are in uncharted territories, I'll use the words that were used by the panelists as well, but I think what's key is implementation. So we know what we need to do. It's pretty much implementation and working together to then rise above our challenges. And this could just be the beginning for Zambia. So I think at this point in time, I will hand over to the Director of Global Markets, Mr. Stanley Tamele, for any closing remarks to viewers. But thank you very much for joining us.
Thank you very much, distinguished panelists and distinguished guests. I sincerely hope you enjoyed and found a lot of value in this session that we just had. This is an annual event, and it's very important to us. It's also very important to the market. So sincerely, on behalf of Absa Bank Zambia Limited, Managing Director, on behalf of OMFIF, I would like to thank you for your contributions, your participation, and we look forward indeed to having you next year, hopefully at a time when we will be in much better space and we will have much improved ranking, and then we can talk about some of the lovely things that would have been implemented. So sincerely, I thank you. I thank you to all our guests, and indeed to everyone that has helped to make this event a success. I thank you and wish you a pleasant day.